Hey everybody, what's up? Welcome back. We're going to be talking about Facebook, Meta Platforms, and reviewing what the heck happened after hours there with earnings and why they plunged over 20%. So yeah, we're going to go ahead and recap what was said at the investor presentation, the numbers presented, projections. We'll go over the good, if any, and the bad, which there's quite a bit. So Facebook, the good. They beat Q4 revenue estimates, not by much, but they did beat them. Q4 revenue was $33.67 billion, and estimates were $33.38 billion. So yeah, when I say they literally barely beat it, they barely beat it, but at least they beat it. Revenue was also up year over year for the quarter by 20%. And that was in line with what estimates were. Okay, now on to the bad, which I have a whole list of it on a paper down here, versus the good that had one thing. The bad. This quarter did miss EPS estimates. Earnings per share estimates were $3.84, and instead we got $3.67. I think it's also worth mentioning that EPS year over year is down 5%. The other big slap in the face is Q1 2022 estimates, which are anywhere from $27 billion to $29 billion. The expected revenue for 2022 Q1 was supposed to be around $30.2 billion. I think it's also worth mentioning that based on projected revenue from Facebook of $27 billion to $29 billion, that represents anywhere from a 3 to 11% year over year increase. I'll be the first to acknowledge that a year over year of 3 to 11% for the first quarter of 2022 wasn't exactly what many were expecting, but of course, 3 to 11% year over year does not represent the entire year of 2022. And for some companies, in no way is the first quarter their strongest quarter. In fact, it's a lot of the other quarters that end up being their biggest quarter. Now, these were the two big headlines that were pulling Facebook down after that 20+% plunge. The EPS miss and the lower projected revenue compared to the estimates. But I do want to go over a few other things that I noticed on there that were probably kind of overlooked and could be more bad things for them, to be honest. First of all, it's worth mentioning that net income is down year over year by 8%. That's on top of the fact that EPS is also down 5% year over year. I think this is potentially showing a weakness that earnings are not quite as good as they were the year before, just simply based on certain factors that we're about to get into. And this is going to bring us into some bad news that was literally mentioned by Facebook in the investors' presentation. They acknowledged a lot of headwinds that are coming up. And there was 3 that I noticed in particular. 1, inflation. Facebook mentioned that inflation could certainly affect how much they're going to make. Now, 2 is a big one, and that is the changes that Apple made to their iOS. Changes to Apple's iOS policy really struck Facebook hard, and I think that's why we saw a hit on the EPS and net income for Q4 2021. I'm sure anyone who has invested in Facebook or has been following Facebook enough to want to invest knows of this and knows that basically, Facebook already acknowledged that earnings could be affected from ad revenue because of Apple's iOS policy change. So anyone that is basically using an Apple product, Facebook is going to potentially get less money from the ad revenue. And a third headwind that they mentioned was just in general them potentially making less ad revenue from pretty much all businesses in general. They said that a lot of companies that had a bigger budget for advertising, which is good for Facebook, because that's how they make their money mainly, is through advertisements. A lot of companies have to cut cost on their advertising budget because of having to cut cost of their own, such as paying employees more, or just supply chain issues, which have also upped their cost. And they just don't have as much of a budget for advertising. Now, do remember that a potentially big tailwind for Facebook is Meta, the name they changed to, the metaverse. However, that is in the future, so we can't factor any of that into what we're talking about now, or any future projections, because we have to base it off numbers that we currently have. So unfortunately, all the stuff we're talking about is the headwinds we know about right now, and just all the numbers we know about, and basically what was presented was a lot of things that are probably going to be a little concerning to a lot of investors. So that's going to wrap up the video. If you feel that this content added value to your day, please go ahead and give this video a thumbs up and subscribe. And for anyone watching, what do you think about Facebook right now? I personally ran a DCF model on Facebook about 1 week ago, and based on the metrics I had available to me at the time, and using conservative estimates, the fair value came back at about $370 some odd dollars. So based on the metrics at that time, I already saw it as a bit undervalued. And now Facebook has gone ahead and plunged to the last stock price I saw, 260. So there's a lot to be considered here. I may even have to run another DCF model based on updated numbers. So let me know down below in the comments what you currently think of Facebook. Do you think it's a buy, or are you gonna wait and kind of see what happens with it? Okay, everyone, that's gonna be it for this video. Y'all have a great day.